Welcome, Valueholics. This is Crack the Sky Value Investing. Today we'll be taking a deeper dive into the newish offering from CommSec, the CommSec Pocket app. Saint or Sinner is the headline here. There's been a bit of controversy around this app. I'm not sure if you guys know that, but I'm here to inform you. So stick around to the end. I'll also give you an idea of which ETFs I would buy within this app if I was going to use it, and also how I'd allocate my funds to it. Stick around, let's have some fun and make some money. G'day there, Valueholics. As you all know, my name is Scott, and my mission here is to give you the tools, the knowledge, and the confidence to take control of your own finances and your own financial freedom. As the saying goes, I want to crack your financial sky. And along the way, I want to have some fun and we want to make some bloody money together. So stick around and I hope you enjoy the coming presentation. Yeah! Okie dokie. Now let's just dive right into checking out some basic information about the app, I suppose, is the best way to look at it. So your minimum investment for this new app, CommSec Pocket app, is $50. I think that's very, very affordable. So looking at micro investing into ETFs, I think this is a good initiative by CommSec, and I think it'll be something that's followed on quite rapidly by the other major financial institutions, NAB, ANZ, Westpac and the like. So for a new investor, I think this is a great starting point. Okay, so with this app, you have the option to choose from 7 different exchange traded funds. If you're not sure what exchange traded fund is, click on the card. I'll take you back to one of my other videos, and it runs through and explains it reasonably well, I think, anyway. So in no particular order here, we have the BetaShares Global Sustainability Leaders ETF. The code is ETHI. So that is a exchange traded fund that focuses on ethical investing. So companies that don't have any slavery in their supply chain and that type of stuff. ETF in the second position here is IEM, which is the iShares MSCI Emerging Markets ETF. So this one will give you access to emerging markets across 20 different countries. It's a good way to get exposure to emerging markets because they tend to outperform more established markets or first world markets. IOZ is the iShares Core S&P ASX 200 ETF. That one will give you access to the top 200 companies listed on the ASX. Not a bad option. In my opinion, there are better alternatives than IOZ out there, but that's for a discussion later on. IOO, which is the iShares Global 100 ETF. This is a ETF that will give you access to arguably the top 100 companies in the world, so excluding Australia. So that gives you your international diversification. I think 100 multinational companies throughout the world is probably not a bad starting point for diversification internationally. IXJ is the iShares Global Healthcare ETF, and that one aggregates a lot of the big healthcare companies. You know, I suppose it's being looked at health-wise, I suppose is another way to look at it. But so that looks at the index just focuses on healthcare companies. That one's performed reasonably well over the trip. We have SYI, which is the State Street Spider MSCI Australia Select High Dividend Yield Fund. So that one looks at all the higher earning dividend companies, so dividend paying companies I should say, similar to IOZ, just kind of a little bit of a tweak on that whole ASX top 20 focus companies. NDQ is the Beta Shares NASDAQ 100 ETF. This is a good little ETF if you want to get exposure to just the best 100 tech companies listed on the NASDAQ. So, you know, companies like Apple, Amazon, Microsoft, and all those ones. So tech savvy, I suppose, is another way to look at it. So I thought, you know, we'd have a look at the investment options and maybe have a look at how they're rated and just their performance last year. So IOZ, that one is rated bronze by Morningstar. So Morningstar are a ratings agency and research agency. You get a lot of great information through those guys. Last year's financial performance, we saw the share price for IOZ up 11.64%. IOO, that's also rated bronze by Morningstar. We saw a pretty healthy performance there of 14.57% last year. IM, that has a neutral rating, didn't perform so well over, last year, but it has performed better over the preceding 5 to 6 years. Last year, the returns were pretty average, or dismal, I should say, at 3.84%. SYI, that gets a bronze rating from Morningstar. We saw returns of 10.06% last year. NDQ, that's not covered by Morningstar. They're currently expanding their ratings and what they're looking at for international. That one had a pretty good performance of 14.55%. So, you know, big tech companies, they've had quite a good run over the last few years. So that's why that one's had such a push as well. So ETHI, that has a neutral rating from Morningstar. I don't mind that one, to be honest. That one has had returns last year of 16.77%, so pretty healthy returns. IJX, which is our healthcare focused ETF, that one's not covered by Morningstar either. That one did the best out of the whole list here. We've seen a 17.57% return. So investment strategy, so how does this whole thing work? So the main thing for the CommSec Pocket app is you select which ETFs you want to invest in. So when you invest in one, you're buying one individual share in that ETF, or another way to say that is a unit, but it's really one share of that ETF. So, I mean, I mentioned before about there's been a little bit of controversy about this CommSec Pocket app, and you know the main controversies around the way that these ETFs have been chosen. You know, I kind of describe it as fitting a square peg into a round hole, and pretty much they've created what I think is a somewhat compromised ETF selection criteria, and that's based mainly around price. So really they're looking for ETFs with lower prices, so to fit in with that whole mantra of minimum investment is $50, so they actually want you to be able to buy something for $50, so that means they're looking at ETFs with a lower price on the market, and that does not necessarily give you the best product. That's what the main controversy about this has been. So using your unit price as a dominant factor when you're choosing these ETFs, effectively it's excluded Vanguard. Vanguard is possibly the best and cheapest ETF provider. So, you know, there's a couple of Vanguard's ETFs like VS and VGS they're considered the best on market by some of the researchers and analysts. So I know you look at the Morningstar ratings of the Vanguard funds, and they're all quite rated. The best ones are rated quite high, gold and silver and the like. So I mean, the biggest problem, as we mentioned before, is your minimum purchase price. Your minimum investment of $50. Wouldn't allow you to buy a typical unit in Vanguard, because they're all Vanguard ETF, I should say, because they're all priced higher than that. So that's one of the reasons why they've been excluded. So pretty much the guys that created the Pocket app really want you to be able to buy an ETF with a $50 investment. So that's why they've actually had to look at these types of compromises effectively. Fees, I think the fees aren't too bad when you look at them. I mean, if you wanted to compare them with Raiz, which is another investment app, you can. I think they're, from memory, they're similar. So the CommSec Pocket app has no monthly fees, which I think is good. However, it does charge a brokerage fee for each trade of up to $1,000 and 2% for any amounts over $1,000. So if you invested $50 twice a month for a year, you'd be charged $48 a year in total investment of $1,200. If you invested one lump sum of $1,200 annually, you'd only be charged $2.40 for your annual fees. So if you look at it that way, it's possibly, well, it definitely is cheaper to invest $1,000 or more over at one time, I should say, or you could split it into, say, two $500 chunks. I mean, that's only going to cost you $4 to do those two trades. So quite possibly, instead of doing it once a month, you do it once every 3 months or once every 6 months. Save up your money and then buy your ETFs that way to keep the costs down. So payment options, we've kind of already a little bit touched on that. So you can make a one-off lump sum investment into your chosen ETF, or set up an automatic fortnightly or monthly investment plan. So as we just touched on, I think the automatic plan is good, but you are going to be charged more fees. So possibly the monthly or even a 3 monthly investment plan. But yeah, like I say, I think probably if you invested every 3 months, that's probably going to keep your fees down to a manageable level. But the habit of getting into doing this investment, that's, I think, the critical thing, not so much the fees that you're going to be paying. So if you do your investment every 3 or 6 months, I think that's the habit that you need to get into, and don't worry too much about the fees, because the fees are quite low, anyway. So you just download the app. It's pretty simple. Like with all these apps, you just go to the Google Play Store or Apple App Store or whatever it is, depending on if you've got Apple or Android or whatever you're using. Download it. Takes it 20 or 30 seconds, and off you go. Bob's your uncle. Okay, so I think this is probably the most useful part of this whole process. Just to show you guys hypothetically, if I was using this app, what I'd do, how I'd set it up. The three main considerations: we want to have diversification, so we don't want to have all our money in the same or similar type of assets. We want to be looking for low fees, because high fees reduce our returns, and that means less money in our pockets. And also dividends, because as I said, you want to actually have some money coming back in your pocket, and dividends make up quite a healthy percentage of your overall returns from investments in the stock exchange or in companies in general. So I chose IOZ, which is the iShares S&P ASX 200 fund. That one pays a dividend of 4.8% and also has very low fees of 0.15%. I followed that one with ETHI. That one picks out the 100 biggest future global sustainability leaders. So that's an internationally focused ETF, and that has some big names, you know, like Apple and a lot of the other tech companies, but also healthcare companies and things like that. So pretty much it covers a good cross section of all things throughout the industry. I chose that one over I100. I think that one's, you know, thinking about sustainability and international investing. We want to be involved in international, but we also want to be thinking sustainable. Something I think a little bit more about these days. Pays a pretty good dividend of 4.24% when I put this slide together. Fees are a little on the high side, but not too bad. It is an international ETF, 0.49% per year. The next one, probably a little bit interesting for most people after looking at the performance slide, but I like IEM, which focuses on the best large mid-cap equities in the top 20 emerging markets. I think over the long term, emerging markets actually do quite well, and if you go back and look at the graph on IEM, so when you're doing your research on these things, you'll always want to go back and have a look at the past performance. But as always, past performance is no guarantee of future performance. But I think having some a portion of your funds invested in emerging markets over the long run will actually bump up your overall returns. So with the 3-stock or ETF portfolio, how would I allocate my funds to it? So if I had say $200 to invest, I would invest $100 in IOZ, so $100 into the Australian market, and because the other two ETFs are effectively international, I'd put 50 into ETHI and 50 into IEM, so that gives it a balance, a pretty good balance, I think, anyway. So the way I look at it is, so for every $1 I put into the Australian market, I'd put 50 cents in each of the other two, and that kind of balances out not too bad. I mean, that's a simplistic way, and that's kind of the way I look at it and the way I'd run this. Keep it simple. Don't want to overcomplicate yourself. So you don't want to be investing in all 7 of these ETFs because your fees start to mount up. So you want to pick what you think are the best. I'd say 2 or 3. That gives you diversification, keep your fees low. Look for dividends, because dividends are a big portion of your return, and also those dividends can actually be reinvested into more shares in the ETF. So that's what we want. You want to be reinvesting your dividends into more shares. So, saint or sinner, the reason we're all here is, I suppose, to get my view on what I think about this product. So effectively, it's definitely not a perfect offering, but a reasonable attempt at democratizing micro investing for the masses. It's worth a crack if you're a NAB banking customer. I think and you don't have any other investments, I think it's definitely a good way to introduce yourself to investing on a small scale. You just need to, you know, set up your savings plan, or every 3 months you invest a couple of $100 into it, see how it goes, see how it all works, and over time you can actually, you know, whether you keep this product, but it's just really just getting involved in investing. Like I say, when you're focusing on these type of things, diversification, low fees and dividends. So I think you can do that inside this app. Like I say, it's not perfect, but I think the returns you'll get will be okay over the long term. You know, so when we talk about long term, it's not 1 year, it's sort of, you know, 10, 15 years. So they're the type of investment horizons. But pretty much, if I had to give this a star rating, I'd be inclined to give it a 3 out of 5 stars. Like I say, I think it's usable. It's not perfect. I think if you're a CommSec customer, it is a good starting point. And also, if you're not a CommSec customer, it's also worth looking at, doing a bit more research on. You know, it's pretty simple these days to set up an account, because they require that you have a CommSec account to actually trade this app. You know, 5 or 10 minutes, a little bit of registration, a few numbers and some names, and you're off and running. There are other products like I think it's Raiz and Smart Money or something like that. So, you know, before you go into these things, you always want to be looking at the alternative options out there. And I don't mind this; it's not perfect, as I say, but something that if you're interested in doing some small-scale investing, building your knowledge, and then it's kind of a stepping stone to something a bit bigger, a full trading account in a few years' time, once you've gathered a bit of knowledge on the overall investing landscape. So it's definitely a good starting point. Not perfect, as I say, not saint, not sinner, somewhere in the middle. Like a lot of things in life, there's always something in the middle. So as always with these type of videos, it's not really a recommendation for any particular product. What I'm doing is I'm demonstrating and entertaining you guys, but giving you an idea of what I would do. But it's definitely effectively for your background information and part of your research process. At times you may need to get additional advice on your investments, and I definitely don't understand your personal circumstances or needs. So if you are interested, make sure you do your research on these products. G'day guys, thanks for hanging around. I hope you've gained some great information out of the presentation today. If you have, hit the thumbs up and subscribe. I'm trying to create lots more entertaining and information-packed content. Yeah, I really hope everyone enjoyed the video, and until next time, thanks very much. Ciao.